Welcome to CoachFin. I am Nilesh Bodhi and today we are going to see ICICI Retirement Saving Funds which is generating 14% return since inception. We will see how we will be generating a corpus of 4.44 crores just by investing 8,000 SIP per month, and then how we can get 1 lakh pension for life with happy retirement. Why is it necessary to plan for retirement? As we have seen, COVID has come, and after COVID, we have seen the healthcare insurance has going up and up. People have understood the value of healthcare now, and hence we have to strive very hard to keep up the healthcare costs. COVID has taught us a lot. So that is the first reason. That is to keep up with the rising healthcare costs, we have to plan for our retirement. Second is the increased standard of living. In this century where we are living, everything has become costly and people are spending more. They want their lifestyle to be good, and to keep up with that increased standard of living, we need to plan for our retirement. Third is inflation. If you see the inflation rate in India, it is more than 7%. The bank is giving only 5 to 5.5% of FD interest rate. So if we put our money in bank, then we would be a loss of 2%, right? And that is not viable, because if the inflation goes up and up, then we won't be able to survive. Hence, it is very necessary to plan for retirement so that we can keep up with the inflation costs. Fourth is we have to protect your post-retirement lifestyle, the life which we have been living for so long, let's say 50 years or 60 years, and then we plan for retirement. We have to keep up the same life which would be living before retirement. So to protect that particular life and to live the same life after retirement, we have to plan for retirement. So these are the reasons why we have to plan for our retirement. Retirement is often taken as a point of no employment. However, in more modern terms, it could simply mean that you no longer need to work to run your household and living expenses. The key to happiness after retirement is the healthy body, mind, and bank balance. While you will work on the body and mind, money definitely will make it easier. In other words, when your investment assets are generating enough income for you to live happily, that's when you call yourself retired. Thus, for a happy retirement, one of the key ingredients is income from your asset outweighs the salary or your professional income. Whether you retire early, don't retire at all, or just want to replicate your income as early as possible, you want to do it tax-free as far as possible. There are very few such long-term investments which allow you to invest as much as you need and provide tax-free maturity value. Hence, the benefits of retirement planning are enormous. So you have to look for safe investment option. It will help you to maximize return on investment. It will create a retirement corpus for a happy retirement, and it will build finally a safety net so that you can live your life totally free and do whatever you wish to do in your retirement time. So today we are going to see ICICI Prudential Retirement Fund Hybrid Aggressive Plan. This is an equity plus debt solution oriented plan where they invest in both equity and debt. The launch date of this particular fund is 27 February 2019. The NAV is 18.19. The AUM of this fund is 175.95 crores. There is a lock-in period of 5 years in this particular fund. The exit load is 0%. The expense ratio is 1.09%. As per Riskometer, this is very high risk fund. If you see the minimum SIP, then you can start with just rupees 100 in this fund, and the minimum lump sum is rupees 5,000. This fund has given a return of 7.05% in 1 year, 16.64% in 3 years. We don't know the 5 years return because this fund is yet to complete its 5 years, and since inception it has been giving 14.15% returns. Let us see the fund performance parameter now. The first one is standard deviation. It gives an idea about how volatile fund returns has been in the past 3 years. Higher the standard deviation, higher is the volatility of the fund. In this case, this fund is highly volatile, as we can see. Second is beta. Beta gives an idea about how volatile fund performance has been compared to similar funds in the market. Lower beta implies the fund gives more predictable performance compared to similar funds in the market. A beta greater than 1 indicates a stock price is more volatile than the overall market. A beta less than 1 indicates that the stock price is less volatile than the overall market. A beta of 1 indicates that the stock moves exactly identical to the market. The third one is Sharpe ratio. Sharpe ratio indicates how much risk was taken to generate the returns. Higher the value means fund has been able to give better returns for the amount of risk taken. Higher the Sharpe ratio, better is the fund. And in this case, as we can say, Sharpe ratio is better. The fourth one is alpha. Alpha indicates how the fund has generated additional returns compared to the benchmark. Remember, higher the beta, lower is the alpha, and vice versa. Standard deviation and beta must be as low as possible, whereas Sharpe ratio and alpha must be as high as possible. Now, imagine if you would have invested 10k in this fund 3 years back, then it would have become 15.8k, which is 16.7% return. Whereas in the retirement fund, it would have become 12.4k, which is 7.4% only. So that was regarding the fund performance of this particular fund. Let us now see the allocation and downside of this particular fund. So this fund is allocating 75.01% in equity and 18.94% in debt. If we see the number of stocks, then it is holding 44 number of stocks in its portfolio. If we see the allocation by market cap, then it is investing 59.5% in large cap, 8.66% in mid cap, and 3.17% in small cap. If we see the allocation by sector, then it is investing 11.86% in healthcare, 11.46% in energy, 10.64% in automobile, and 8.13% in communication sector. If we see the top stock holding, then it is investing 7.9% in Airtel, 5.75% in ICICI Bank Limited, 5.73% in Reliance Industries Limited, and 5.67% in Ultratech Cement. Now, when we see the downside protection, then in this particular fund, we can see for a period of 1 week where the market is falling minus 0.37%, this fund has fallen minus 0.27%. That means this fund is falling less compared to its market. So it is offering good downside protection in 1 week period. If we see the YTD, that is year to date period, then in that period where the market is falling minus 0.08%, this fund is falling minus 1.51%. That means this fund is falling more when compared with its benchmark. Hence, this is not providing good downside protection in YTD period. Okay, I hope you have understood particular parameters, and if you watch all my other videos, I have been continuously telling you about all these parameters. If you still want to have an elaborative video, then please comment and let me know that you want to know about the parameters, and I'll make a special video only on the parameters to look in a mutual fund whether to buy or to sell. Okay. Now, if we invest 8,000 per month as an SIP into this fund with the expected returns of 14% for the next 30 years, then what is the corpus we will generate? So for 10 years, our invested amount is going to be 9,60,000. The estimated returns will be 11,36,731, and the total, which is invested amount plus estimated returns, is going to be 20,96,731. For 15 years, the invested amount is going to be 14,40,000. Estimated returns are going to be 34,62,830, and the total including the invested plus estimate is going to be 49,02,830. For 20 years, the invested amount is going to be 19,20,000. Estimated returns are going to be 86,10,770, and the total including the invested plus estimated is going to be 1,05,30,770. For 25 years, invested amount is going to be 24 lakhs. Estimated returns is going to be 1,94,18,222, and the total including the invested plus estimated is going to be 2,18,18,222. For 30 years, the invested amount is going to be 28,80,000. Estimated returns is going to be 4,15,76,445, and the total including the invested plus estimated is going to be 4,44,50,445. So if we invest 8,000 per month as an SIP today with the expected returns to be 14%, then we would generate a corpus of 4,44,50,445 in ICICI Prudential Retirement Fund. So we have made a corpus of 4.4 crore, out of which we are going to invest, that is reinvest actually, these 2 crores into systematic withdrawal plan, where we would be getting a monthly return, that is fixed income plan, or you can say pension, of 0.5% per month, which is going to be 1 lakh per month. Okay. So if we invest our 2 crores for 5 years, then we will be withdrawing 60 lakhs in 5 years, and the total would be still 2 crore 50 lakh 97,941. In 10 years, we would be withdrawing 1 crore 20 lakhs, and the total is still going to be 3 crore 34 lakh 85,628. In 15 years, we would be withdrawing 1 crore 80 lakhs, and the total is still going to be 4 crore 72 lakh 85,964. In 20 years, we will be withdrawing 2 crore 40 lakhs, and the total would still grow to 6 crore 99 lakh 91,782. In 25 years, the withdrawal which we would be doing would be 3 crores, but the total will still grow to 10 crore 73 lakh 49,866. And if we keep it for 30 years, then we would be withdrawing 3 crore 60 lakhs, and the total would still grow to 16 crore 88 lakh 15,455. So as we can see, if we invest, and that is, we start 8,000 per month SIC in ICICI Prudential Retirement Fund, then we will make a corpus of 4 crore 44 lakhs. And if we reinvest the same, that is 2 crores into systematic withdrawal plan, then we'll make a monthly pension of 1 lakh for life. And with that also, still we'll be making a corpus of 16 crore 88 lakh 15,455 in this fund. Thanks for watching. Please understand, mutual fund investment are subject to market risk. Past success does not guarantee any future performance. If you wish me to be your mutual fund distributor, then please email me at coachfin2022@gmail.com or fill in the Google sheet given in the description. Please also open your free lifetime account on Asset Plus for investing in mutual funds. Please comment and let us know how did you like our video. Also, if you are new to our channel, then please subscribe and hit the bell button next to it. That's all for now. See you in the next video. Till then, take care.